The airline industry is hitting turbulence. Cruise lines are charting a different course. Royal Caribbean beating Wall Street expectations on the top and bottom lines. The cruise liner citing strong demand and strength in onboard spend as key drivers in first quarter earnings. Meanwhile, the company also looking at an upbeat profit forecast for the year. Here to discuss is Royal Caribbean Group CFO Naftali Holtz. Thank you for joining us here today. So record bookings by a couple different metrics, strong guidance. Just give us an overview of your quarter, please.
Yeah, hi Jared, good to be with you. We were very, very pleased with what we reported this morning. We continue to see very strong demand for our vacation experiences. We increased our revenue guidance for the year and obviously the earnings as well. We see a lot of very engaged consumers new to our category coming in. We increased our new to cruise category by 16% versus the first quarter of last year. And we're seeing continued strength both on ticket as well as onboard experiences. A really engaged consumers that comes to spend the time and vacation with us. So we're very pleased both on the revenue side and obviously 60% year-over-year earnings growth.
Naftali, the numbers have been consistently strong, and I know that your forward bookings are also ahead of where they were last year at this time. Are there any signs of slowing whatsoever as you look across your different properties, as you look at the amounts that people are spending on ship, et cetera?
Yeah, so as you noted, we see strength across the board. Obviously, the booking levels, the pricing for that. And remember, cruise is an exceptional value proposition for people today, and we see those choices coming to us, to our brands, to our vacation experiences. We see more people engaged on buying more experiences on the ships, actually planning and booking them earlier than before, just to make sure that when they get on the ship, they get the best vacation experiences there. Very, very strong across our brands, across demographics and itineraries. Obviously, the US and the Caribbean has been exceptionally strong. That has been very consistent, and we've seen that also in Europe, Alaska, and other itineraries and that we operate in. So it's really strength across the board.
Naftali, I'm looking at a chart on our Wi-Fi Interactive of RCL, that's Royal Caribbean, a 5-year chart, and this shows that this stock has exceeded the highs that we saw before the pandemic. And I gotta say, when I saw this drop here, I had to wonder, when is this stock gonna be able to come back? And I said that for a lot of travel stocks, and there you've done it. Any hangovers from the pandemic, or is it just full speed ahead now, thinking about the future?
Yeah, we're very much looking forward to the future. Obviously, when we went through the pandemic, we had to raise capital and dilute to shareholders. So we had to kind of work extra hard to overcome that. And we've done it through making sure first that we deliver the experiences that our customers want and need. And really that has been a driver of that. At the same time, growing the top line, we really focused on cost to making sure that we enhance margins. And that allowed us to pay down the debt and some of the debt that we've raised through the pandemic, and obviously overcome the dilution. But our focus is straight ahead. We have our Trifecta program. It was a program that basically allowed us to get back to base camp. And now we expect to achieve it this year, but our ambitions are much, much higher. We want to continue to grow the company, moderate capacity growth, moderately grow our yields, strong cost control, enhance margins, and we're doing that. We're delivering ships this year and over the next couple of years. We have Icon of the Seas that just delivered, Utopia. We're investing in destinations. We just earlier this year opened the expansion of Coco Cay. We have announced 2 other developments, one in the Bahamas and one in Mexico, that are creating amazing beach experiences for our customers. We're investing in our technology, in our commercial apparatus. So there's a lot of exciting things for us. So for us, this is just exciting years ahead. We've stayed very, very focused that we play in a $1.9 trillion vacation market. We're a $65 billion category. So you can see that there's so much more opportunity in the years to come to continue to grow the business and take share from that amazing and very attractive market.
Naftali, what's going on the pricing front as you see this continued strong demand? How much pricing power do you feel you have? And those forward bookings that you're seeing, what price have you taken on those?
Yeah. So first, it's a very, I think it's important to note that cruise remains a very strong value proposition for the consumer. Historically, before the pandemic, we had probably 10 to 15% discount to land-based vacation. 2 years ago, when we were starting to come back, we were around 45%. It was just very, very compelling. So we've closed the gap a little, but we think there's still opportunity to close the gap to land-based vacation. And we're doing that with the offerings and the experiences we offer, the new ships, the new destinations, making sure that we are tailoring the vacation to the consumer. And what we found is that if you do that, obviously people want to spend on those, to spend on experiences and really tailor those vacations for themselves. So we've seen great progress on that, and we think we can do more as we continue to grow the company.
Thanks, Naftali. Good to see you. Thank you.
You too.